The tax exemption for the banks is likely to continue despite large profits being made by many institutions last year. The exemption allows banks to write off their tax on profits of previous losses. Last year, Bank of Ireland, AIB and PTSB made combined profits of €2.5 billion. However, they paid no tax. Instead, the banks paid a bank levy of a combined €150 million. This is less than half of what would have been due if they were paying corporation tax of 12.5%. A Department of Finance source said the bank levy is more appropriate method as opposed to messing with the tax system and other corporate groups. The department is also conscious that any tax increases for state-owned banks, particularly AIB, could affect their share prices. This is because all the government is interested in is selling off the shares in the banks as soon as possible, not using the ownership in the interest of the people. For example, in recent weeks, both PTSB and Ulster Bank have sold off so-called bad mortgages to vulture funds. PTSB sold approximately 11,000 mortgages to Start Mortgages, owned by vulture fund Lone Star. Ulster Bank are selling a further 5,000 mortgages to another US vulture fund, Cerberus. When Minister for Finance Paschal Donohoe was criticised regarding the scandal, he was nowhere to be found. Instead, Junior Minister Michael McGrath said, "We own some of the banks, but we don't run the banks. We are not in a position to do what some people say we should do." PTSB is 75% owned by the taxpayer, while AIB is 71% state-owned and Bank of Ireland 14%. The Fine Gael government can intervene to help the banks avoiding paying tax, but they can't intervene to save ordinary people from being evicted from their homes. In the first 6 months of 2018, 300 mortgage holders were taken to the High Court by the banks. A third of them were by state-owned PTSB. At the same time, permanent TSB Chief Executive Jeremy Masting received a pay increase of 11% or €50,000 in his total remuneration in 2016, which brought his earnings for the year to €502,000. In AIB, executive directors and other key leaders will receive deferred shares equivalent to 100% of their salaries from next year. AIB's chief executive Bernard Byrne received a salary of €500,000 in 2017, plus a pension payment of €100,000. The government should use the state ownership of the banks to stop evictions instead of giving the banks tax breaks.